Ever wondered what happens when you transfer your property to your children and they decide to sell it? Picture this. You're in Chennai and you pass on your house and land to your children through a settlement deed. If they sell it after a couple of years, they might face a long-term capital gains tax of 20% indexation plus extra charges. But hold on, there's a silver lining. Such a transfer qualifies as a gift under Section 56(2)(x) of the Income Tax Act 1961, exempting your children from the tax on the property received. So, though it may seem complex, the tax implications can be navigated with the right knowledge. What if you're selling unlisted shares and looking for ways to manage tax implications and save for retirement? Consider this scenario. You're 52 with 2 houses, a college-going son, and shares worth 5 crores. Reinvesting in a larger house to leverage long-term capital gains benefits might not fully alleviate your tax burden. A tax expert's insights could provide a clearer understanding of your liabilities. When it comes to retirement planning, a general rule of thumb is to aim for a nest egg, about 25 times your current annual expenses. This takes into account inflation and separates your retirement goals from other financial objectives. Remember, managing tax and planning for retirement requires careful thought and expert advice. What if you've sold real estate and are now facing a hefty tax liability? You're not alone in this scenario. Let's say you've sold real estate for a little over 1 crore rupees with a capital gain of around 96 lakh rupees. This leaves you with a tax liability of approximately 19 lakh rupees. What can you do? One option is investing in capital gains bonds under Section 54EC within 6 months of the property sale. Remember, there's a maximum investment limit of 50 lakh rupees per financial year. Alternatively, you could pay tax on the remaining capital gains and invest the balance in equity mutual funds. When faced with capital gains, knowing your investment options can make a big difference. Always consult a tax expert to understand your specific tax liabilities and make well-informed decisions.